The live price for Ondas Holdings Inc., ticker ONDS, is currently $6.38 in the after-hours session as of the last available data, showing a significant movement of plus 0.5787 or 9.96% above the prior day's close. Now, if you are looking at that nearly 10% jump and thinking this is a simple continuation of the recent high volatility, the actual story is much more layered and, frankly, unexpected. The immediate high-octane spike is less about a massive new contract, though those are central to the long-term thesis, and more about a deeply consequential yet seemingly mundane advisory board appointment that acts as a signal flare to the entire defense and public safety establishment, a critical sector for Ondas Autonomous Systems. This isn't just a friendly face being added, it's the appointment of Major General retired Yoav Har-Evan, the former president and CEO of Rafael Advanced Defense Systems, to their advisory board. When you bring someone with that level of experience who has successfully navigated the complexities of international defense procurement and technology commercialization at a company like Rafael, it tells a very specific story to institutional players. This move validates the company's autonomous systems strategy, specifically their counter-UAV and defense platforms, in a way that a press release about a small pilot program simply cannot. This kind of high-level strategic personnel move often precedes or facilitates larger, more impactful defense contracts because it telegraphs credibility and a deep understanding of the end user's needs and compliance requirements. The common expectation for Ondas Holdings Inc. is often framed around its dual identity. The Ondas Networks segment, focused on next-generation wireless networks for mission-critical industrial markets like rail, and the Ondas Autonomous Systems, OAS, which handles drones and autonomous systems for defense and critical infrastructure. Investors tend to focus heavily on the network side, particularly the adoption of its proprietary FullMAX technology by the Association of American Railroads, AAR. The narrative is that once this technology is fully rolled out across North American rail, it represents a massive, predictable, recurring revenue stream. This expectation is sound, but it creates a vulnerability in the popular analysis. The reality is that the stock's recent dramatic volatility, including this sharp move up, is overwhelmingly being driven by the autonomous system side, which is inherently lumpy, high margin, and highly sensitive to defense procurement cycles and strategic partnerships. The street's general belief is that the rail component is the stable backbone, but the defense and security applications, including the recent expansion of their Rift Dynamics partnership for integrated munition drones and the focus on the Optimus system, are the real high-beta catalysts driving the rapid swings. This is where the tension lies. Expectations center on the slow, methodical build-out of the rail network, but the reality of the stock's short-term movement is tethered to the explosive, often unexpected wins in the defense space, which the new advisory board appointment strongly reinforces as a current priority. Looking closer at the recent trading activity, the sheer volume accompanying the price movements is stunning, indicating a level of aggressive accumulation and trading far beyond what would be typical for a small-cap tech stock, purely on an industrial networking story. This is a telltale sign of institutional interest positioning themselves ahead of anticipated major contract announcements, or at least trading on the signals, like the high-profile advisory board addition. When you see such high turnover, it suggests that major participants, perhaps sophisticated individual brokerage accounts or institutional holders akin to those managed by Fidelity Investments or BlackRock, are making large directional bets. Recent institutional holdings data is actually quite revealing, showcasing significant increases in positions from several major institutional holders in the last reported quarter, a clear indication that a deeper structural belief is forming around the OAS growth story, not just the stable networks foundation. It shows a large number of institutional investors either initiating new positions or substantially increasing existing ones, which contributes to the stock's elevated volatility and rapid price changes on news. This is a very different kind of market behavior than the slow, steady accumulation you would expect for a company purely executing on a long-term utility-style contract like a railroad network upgrade. It's an appetite for explosive growth. The macroeconomic pressures right now also play directly into the OAS segment's favor, with global defense spending on the rise due to geopolitical tensions and an increased focus on autonomous asymmetrical warfare capabilities. Companies providing cutting-edge solutions like drone-based security and counter-UAV systems are seeing a massive tailwind. This sentiment is certainly benefiting NVIDIA stock, since their chips are critical to AI in autonomous systems, but it also lifts smaller, more specialized players like Ondas. The company is actively focusing on positioning its Optimus and Iron Drone Raider platforms for U.S. defense and critical infrastructure applications. The integration with Palantir's Foundry platform, announced earlier, isn't just a technology partnership. It's a strategic move to address the scalability and data security requirements that Pentagon program managers demand before awarding large, high-volume production contracts. They are setting the operational table for large defense orders by leveraging a trusted, established platform. This strategic planning is often missed by retail online investment accounts focusing purely on daily price moves. But it's the exact kind of due diligence that large interactive brokers clients or sophisticated fidelity brokerage managers would be paying attention to. Delving into the core business structure of Ondas Holdings Inc., it operates through two key divisions. Ondas Networks provides a patented, standards-based wireless technology for mission-critical industrial Internet of Things (IoT) applications. The key here is the AAR's adoption of their proprietary .16 protocol for the next generation of train telemetry systems, or NGHE Gen 4. This effectively positions them as a critical entrenched supplier to the U.S. rail industry, creating a high barrier to entry for competitors. The other side is Ondas Autonomous Systems, OAS, formed through the acquisition of companies like American Robotics and Airobotics, which provides fully autonomous drone solutions for continuous data capture and security, including counter-drone applications. This segment is high growth, particularly the defense and security subsegments, which command higher margins and are subject to faster technological advancements. Historically, the company has operated at a loss, which is typical for pre-scale technology companies that require heavy investment in research, intellectual property, and sales infrastructure to secure multi-year contracts. The past performance has been characterized by sharp revenue spikes tied to specific contract milestones and consistent negative earnings per share (EPS). This pattern is the reason why many conservative, self-investing accounts may steer clear, but it is precisely what attracts speculative traders looking for multi-bagger returns on a successful contract conversion. The upcoming earnings report, expected soon, is a classic expectation versus reality inflection point. The consensus EPS estimate is for a loss, though a significantly smaller one year over year, alongside a huge increase in forecasted revenue. The expectation is a continued controlled burn of cash to support sales growth. The reality is that the market may already be looking past this quarter's numbers entirely, as the recent price action indicates. The key for the earnings call will not be the precise EPS number, but the color and guidance provided on the timing and size of potential contracts. Specifically the conversion of their large pipeline in the OAS defense segment, and any updates on the final stages of the AAR standard deployment for the network segment. A slight beat or miss on the bottom line is noise. A definitive statement on a significant multi-million-dollar defense contract is the signal that will move the stock dramatically. Given the recently upward revised EPS estimates just prior to the report, which is a bullish indicator known to be a good predictor of an earnings beat, the market is positioned for a positive surprise. However, the expectations are so elevated in terms of future contract clarity that even a slight lack of specificity from management could lead to a sharp pullback. For the future outlook, there are two clear scenarios. The bull case hinges on the OAS segment successfully securing a large multi-year, multi-system defense contract, possibly facilitated by the new advisory board credibility, which would provide a massive immediate lift to revenue visibility and margins. This would instantaneously validate the company's high valuation and speculative growth multiple. Additionally, the full commercialization and mandated rollout of the AAR standard would provide the reliable, predictable, high-margin revenue stream that creates the necessary structural stability, moving the company towards sustainable profitability, which would make the stock attractive to more diverse institutional investors, including conservative holders of Fidelity ETFs and mutual funds. The bear case revolves around execution risk and potential dilution. Ondas has already announced a large equity offering, which, while aimed at strengthening the balance sheet and funding growth, causes immediate concern for dilution among current shareholders. A failure to translate the significant pipeline of letters of intent and initial orders into large, recurring